There is something going on in the housing market.
New data shows rent prices are going down in Seattle.
Here, Seattle studios for rent are down 16%, one bedrooms down 10%, and two bedrooms down 12%.
It is seeing some of the nation's largest drops in rent prices. Ranking 5th, 6th, and 7th is Idaho, Nevada, and Utah.
These cities are doing big, huge rent cut. Like on this listing in downtown Nashville, Tennessee, they are giving away 2 months of free rent when you lease and move in this month, or the equivalent of $4,000 credit if you pick this apartment. That's the equivalent of $3,000 credit if you pick this unit. Also, landlords are doing emergency rent cuts so that they can fill their empty house and apartments. This is a sign that we are about to see both home prices and rent prices drastically drop into the future. In some places, landlords are offering huge lease concessions, everyone. That's why in this video, I will tell you the top 7 cities where rents are falling the fastest right now. So, you are watching the Financial Coffee channel? Let's get into this. Alright everyone, there is something that could cause this investor to eventually be forced to sell their properties, because declining rents in combination with rising interest rate is a nasty cocktail for landlords. But it's a good thing if you're a renter, right? Especially in cities like Glendale, Arizona. Take a look at this listing. It's a 3-bedroom, 2.5 bathroom. But I want you to pay close attention to the history. By the way, they are offering $300 credit applied toward moving costs. But what's really interesting is that it was listed for rent in November 7 for almost $3,000. Then, 2 days later, there was a 10% price cut or $300. And less than 2 weeks later, they listed it for almost $2,500. That's a 70% price cut or $500 less than 2 weeks price cut. In some cities, such as Salt Lake City, Utah, the rents are also going down. And the reason for that is because the excess supply of home and apartment.
Welcome back. We have some good news for renters in Utah. After more than a decade of rent increases across the Wasatch Front, prices are dropping.
Yeah, Utah is finally following the national trend.
But in the past year, rent in Utah has actually dropped nearly 6%. That according to new numbers shared with the KSL investigators by the rental listing website Rent.
Now, we are seeing that housing supply is being dumped into the market. And what's even crazier is we are going to see more of this supply in the future. Because, according to RealPage, the apartment construction is at a 50-year high. There are about 1 million multifamily units actively under construction nationally, which means more inventory and more supplies are coming into the rental market.
That there was also a lot of development in those areas, so there were more levels of inventory there.
Construction is another factor. The Salt Lake County market has added an average of 3,600 new apartments in 2020, 2021, and 2022, according to the real estate firm CBRE. When 2023 wraps, another 5,600 apartments are expected to come online, and add to that 7,400 units projected for next year.
But this is where things get even crazier, everyone. All this new apartment supply is going to come online and push rent down. That is going to create problems for investors and even for some of those investors to sell, which could lower home prices and apartment prices even more. But there's also another issue here for the housing market on a bigger scale, and it's the fact that if rents go down, it will cause home buyer demand to go down as well. Because if someone is renting an apartment or renting a house and they found out that they can keep their rent the same or cut their rent, they're going to stay a renter. There is no way they will take on a 7 to 8% mortgage rate and buy a house, especially if renting is more affordable. Buyers have no incentive to buy in a declining rent environment, especially when it's already too much more expensive to buy than to rent. CNBC is actually reporting that home sales have dropped to the lowest level since the foreclosure crisis. Take a look at this.
Sales were down 15.4% year over year, so we now have a 3 handle. That is the slowest sales pace since October of 2010, which you might remember was during the foreclosure crisis. Just for perspective, 2 years ago, sales were at 6.3 million annualized. That was when the average on the 30-year fixed, of course, was at 3%. Today, it is at 8%.
It's now more expensive to buy a house compared to renting an apartment. That, once again, is a record high in several metro areas such as Dallas or Nashville, Tennessee. Just take a look at these 2 listings. The first one is a house for rent in a neighborhood called Spring Hill, which is south of Nashville, Tennessee. You can see that this is a 4-bedroom, 2.5 bathroom house for rent. It's almost $2,000 a month. Also, they made big cuts on the rent. Originally, It was listed for $2,449 per month. Now it's at $1,999 per month. But this is the most interesting part. In the same neighborhood, you have this house just down the street for sale. It's actually smaller. It has less bedroom and less square feet. But it's on the market for $439,000, which is a $2,642 a month payment at today's price and mortgage rates. So basically the same house in the same neighborhood. You could either rent it for $2,000 a month or buy and pay for $2,642 a month. It's 32% cheaper to rent than to buy. I mean, who is going to buy? No one is going to buy in that environment, which is why mortgage applications to buy a house are now literally at the lowest since 1994. We are seeing apartment developers give more than 2 months of free rent. I mean, take a look at this, everyone. This is a luxury apartment community in Nashville, Tennessee called Haven at the Gulch. This leasing special is 10 weeks of free rent plus newly reduced rate. I wonder if that's a typo. Maybe it is. But let's just do some math on what that means, everyone. If you were to get 10 weeks of free rent, or simply put, it's a 20% discount on your rent, plus whatever reduced rate that they have. And that's to live in a brand new unit in a cool part of Nashville, Tennessee. I think it's a really good deal, people. But you know what? Now I'm sitting here thinking to myself, there is something going on in the housing market. Or maybe it's not going on everywhere, or it's not happening the same way in Los Angeles or New York. But that is definitely happening in Nashville, Austin, or Phoenix.
Well, a shift is underway in the U.S. housing market. It could impact anyone looking to buy or sell a home right now.
That's right. So listen to this. Home prices have fallen in nearly a third of all metro areas across the country since the start of this year. And that's the highest percentage of the country to see a price drop in more than a decade. California and other western regions have been impacted the most. In San Francisco, home prices are down by 14.5% over a year. Prices are 13.5% lower in San Jose, as you see on that nifty map on your screen. Austin, Texas, and Boise, Idaho have each seen a decline in home prices of 10%.
But I have to tell you something, folks. These pandemic boom towns have so many headwinds hitting them at the same time right now. There are only two ways this current situation can resolve itself. Either home prices come down to make it more affordable to the first-time home buyer. It also makes it more profitable for an investor to buy. Because if home prices go down, then that will cause the cap rate to go up, which will increase the return over the 10-year Treasury and make it more attractive to buy again. We need prices to go down so the cap rate can go up. It's a win-win for everybody. Also, because we are seeing rent go down, it's a signal that we could see inflation overall go down in the future. Because rent is about 1/3 of the inflation calculation. It's a major part of it. So if you know that the rent is going to continue to go down in CPI, that's a big sign that the overall inflation will go down as well. But the Federal Reserve, or the Fed, want to keep interest rates higher for longer in order to fight inflation. Here is the problem with that. The Fed really risks destroying landlords and some real estate investors. With rent down and rate up, it could potentially flush out many real estate investors from the market. As a matter of fact, this situation is already causing the value of apartment buildings to collapse, with the Wall Street Journal reporting that multi-family apartments have gone down about 22% in value from their peak. They are basically now back to the level they were before the pandemic, and they are likely to go down further in the future.
But why are we seeing some of the largest drops out west?
Well, those areas specifically during the pandemic, people tended to flock to them. A lot of home buyer migration happened in those areas. And because of that, there was also a lot of development in those areas. So there were more levels of inventory there.
Which create big problems in the commercial real estate sector. Because as the rent are going down and the value of apartment buildings are going down, the landlord for this apartment building now need to refinance their mortgage at higher interest rate, often much higher interest rates. Normally, mortgages on apartment buildings are only 5 to 10 year terms. That means that there are a lot of apartment owners who are trying to refinance right now, but their interest rate is going from 3 to 7% as the value of their building is going down and the rent are going down as well. I mean, there is a systemic risk here for a big blowout in the commercial real estate sector. We are seeing a lot of apartment landlords default on the mortgage and have to give back their keys to the lender, which could cause apartment value to go down even more. That also could actually end up causing apartment rent to go down even more as well. Because if people buy distressed apartment at discount, they will have the flexibility to then cut rents to undercut the market and therefore ensure the occupancy anyway. Maybe I'm thinking too much about the future, but I hope that you guys as home buyers or real estate investor understand the big warning that this downturn in the rental market presents for the housing market. Now, if you want to know the top 10 cities to buy cheap houses for less than $100,000, click on the video that appears on the screen right now. That is all for today. Thank you for watching the Financial Coffee channel, and I'll see you next time. Goodbye.